All right. So the markets are doing well right now, but we'll focus on numbers. Govind Singh, MD and CEO of Utkarsh Small Finance Bank, is now joining us. Small Finance Bank is in focus. Govind, good afternoon. Thank you so much for your time.
Good afternoon.
How was the quarter for you in terms of growth? I mean, you've been posting good growth last few quarters. Tell us about the things which went by in this quarter.
Yeah, this quarter has also been good, in terms of overall growth. If you must have seen for the year, we have grown our advances by 31%. Deposits have grown by 27%, and growth in quarter four are much, much better than for the year also. If you remember that we have discussed that in quarter one and quarter two, it was slow growth because of we had done a lot of interventions and a lot of new initiatives we had taken, and we are deploying those in the field. So the deployment is over now. We had some issues in the mid of the year in terms of a lot of holidays were there, so collections were a little lower in that case. So I think all those have been taken care, and we have got a very strong team across now in all the verticals. So we'll see this type of growth, coming in future also. Our, if you see in all the key parameters we have done well in quarter four and overall for the year.
That's correct. I mean, 30% consistent growth is something which you seem confident of. But what was pleasantly very surprising, what your NPA numbers stood at 0.03. I mean, is it sustainable? How did you achieve this kind of number, and what would you like to guide the street? Because if you put these kind of numbers, the expectation of the street may go up. But where would you like to tell them that what range would you aim at keeping your NPAs at?
No, so if your net NPA is at 0.03%, but our gross NPA at 2.5%. So I think gross NPA number will certainly come down from here, and it may be in the range of 2.10 type of, if you look at the FY25. Net NPA 0.03%, it may be, I mean, actually we thought it would be almost zero and very close to zero. In fact, that is what we are indicating. So this will be zero for sure for this year onwards, because we are making healthy provisions and we are ensuring that our PCR is almost close to 95% plus. So these numbers are sustainable. And you'll see in the FY25 also, in terms of overall growth trajectory and in terms of overall credit cost, which we had indicated will be around 2% or so. So for FY25 also, we expect to be around in the range of 2%. And if you remember that we had discussed, we have a floating provision policy also.
Correct.
So we had done 1.5% for JLG portfolio last year. And then board has guided us. Now this is 2% for this year. So we're almost 75 to 80 crore additional provision will take. And those have been absorbed in our profits, whatever we have shown. So I think that is additional provision which will be a cushion in case of any exigencies as far as the market is concerned.
Do you expect any accidents going forward? Do you expect that, or are you preparing for it? That you are keeping these provisions on the higher side? Okay, we'll just try and get back. But okay. Yeah, Govind, we have you back. You're saying that you'll keep your gross NPA at closer to 2.1, but net NPA will go down because of elevated provisions and the floating provision which you have. Do you, because of saying that if there is any accident ahead, is there any accident which you are preparing for, or just for preemptive measures you would like to keep it elevated?
So it's a preventive measure only. If you remember that, after COVID and all these things, it is very difficult to predict, how the market will or how the things will happen. So it is just to take care of that. And, if you remember that this is a floating provision and we can't use this in normal course. It's not that if your profits are lower, then you'll use this provision. You can't do that. Unless you take a specific approval from Reserve Bank of India, you can't use this. So we have done, to that extent. So this is only for real rainy days, sometime, just to keeping additional provision with us.
Fair point. That's okay. Right. Govind, how was your cost of borrowings this time around? Because for the sector, they saw some pressure on cost of borrowing. And would you like to be able to keep your NIMs around 9.5% on a sustainable basis?
So two things. One is the cost of fund is almost same for quarter three. I mean, 10 basis point plus minus. And I must tell you that we are never borrow in market. In fact, we are always almost nil borrower as far as market is concerned. In fact, we are surplus of about 2,500 crore liquidity as on March 31st. So whenever we talk about borrowing, it's only sometimes tier 2, which is for the capital purpose, or sometimes we take refinance from NABARD and CDB type of institution. So we are always a net lender in market, as far as liquidity part is concerned. If you look at the NIM part, yes, as we had guided for medium term, our NIM will be always 9% plus. It was 9.9 per quarter, but for the year it was in the range of 9.4 to 9.5. With the mix changing over a period of time, we guide that it will be in the range of, it will always be above 9% if you look next maybe 2 to 3 years horizon.
Govind, since we have you, also a quick word on the RBI directives which have come in for small finance banks, and the street believes that next 2 to 3 years is what some of the small finance banks will actually be eligible and going forward for a universal bank license. Would you be also thinking in that direction or preparing?
We will be in the same direction, though we are yet to have a clear discussion among the board and how to go about this part. So, but two things I want to mention about this part. One, this is a very welcome sign. Whenever there's a clarity from the regulator, it's always helpful for all the players. So we also got a clarity now. What are the requirements? How RBI will be evaluating once we approach RBI for our universal bank. From small finance bank to universal bank. So certainly it's a welcome sign. And we'll also evaluate this part. When we actually approach Reserve Bank of India. As far as moving from small finance bank to universal bank is concerned. My sense is next 2 to 3 years time when we should be looking at this part, but obviously we have to have a clear discussion with our board and other concern.
All right, Govind, thanks very much for that discussion. A very good performance, very steady performance, and of course outlook also shared with the viewers. But